Hi there, welcome to Your Trades. You're watching ET Now and I am Snehi Shah, and this is the special weekend edition of the Your Trades episode wherein we'll be covering the entire week and talking about the week that was, highlighting all the major news flows over the course of the week, tell you how the market has performed, and more importantly, we'll also be throwing light on what we can expect going into next week. We'll be bringing our experts on board shortly, but before that, here's what the week that went by looked like. In terms of gainers and losers, when it comes to sectoral movers, you had the entire pack of sectors that was in the green. You had realty that was the big leader, metal, media, energy, all of them have done well. But if you take a look at what Nifty has done over the course of the week, well, we've had quite the tumultuous week coming in for Nifty. Very strong gains coming in on Monday, then you had a little bit of a slowdown coming in. Once again, Thursday expiry day was a big run up coming in of around 1.5% on the index, so at least that looked good. And if you take a look at what has happened over the course of the weekend, Nifty has hit its 6-month high. BEL and Adani Enterprises have led from the front. Nifty mid cap at 4-month high, Nifty small cap at 3-month high. You had the entire defense pack that was up and above. Pull up any stock, the like of Cochin Shipyard, Mascot Docks, BEL, all of these stocks have done so well over the course of the week. In fact, take a look at that. Cochin Shipyard is up 37% over the course of this week. Mascot Dock up 21%. Very healthy gains coming in across the entire defense pack. All the major sectors, like I said, were in the green. Nifty Realty was at 3-month high. Metals has hit a 1-month high. Energy at 4-month high. PSU Banks has managed to end in the green this week as well. IT has hit 2-month high. Nifty Auto at 4-month high. The list goes on and on because of the kind of week that we've seen come by for our markets. If you take a look at some other top news over the course of the week, you had lots that has happened this week. First of all, Nifty has reclaimed that 25,000 mark. Over the course of the week, we went as high as 25,100 before we fell a little below that. But this coming in after 6 months of volatility, that looked good for the market. If you take a look at what VIX has done over the course of the week, VIX has eased 23% to come around that 16.5 mark. There it is. That's India VIX, 23.5% cut coming in over the course of the week, easing, showing signs of some easing volatility in the market. India's retail inflation, let's talk about the CPI print that we received. That eased to 3.16% in April, below the estimate, so that was surprisingly positive for the market. India's April trade deficit, however, widened to $26.4 billion. Let's talk about some stock-specific action. You had Airtel and JSW Infra that were in focus on the back of block deals. For Airtel, the promoter Singtel has sold 1.2% stake in the company. And on the commodity outlook, on the commodity terms as well, oil prices slipped on hopes of the Iran and US nuclear deal. On the other side, you have gold that also lost some shine over the course of the week. That slipped more than 3% in the week gone by. Our exclusive story, the government finalized electricity amendment draft. That's what our sources told us over the course of the week. If you take a look at overseas, what happened in Wall Street over the course of the week as well, for the US, PPI saw some unexpected decline, a 0.5% decline on a month-on-month basis. A very welcome move coming in for the US. Trump proposed 5% tax for non-citizens' remittances. Remember, he's been on a tour of the Middle East and lots of deals he has been signing on that front as well. So that's a roundup on everything that's happened over the course of the week. Let's now welcome on board Sunil Subramaniam, market expert, who's joining us, as well as Rajesh Palvia, who's joining us from Axis Securities on the technicals as well. Good afternoon to both of you. Thank you so much for joining us. Rajesh, before we come to you, I just want to take it across to Sunil sir and get a sense of the week that we have seen, because over the course of the week, the kind of volatility that we've seen, you had 2 days that have had exemplary run-ups coming in. The other days have made up for that kind of move. Net, give us a sense of what our market move has been over the course of this week and what has driven the kind of moves that we've seen on Monday and Thursday, because a percent and a half gain coming in on the Nifty on such a back-to-back basis is something that we don't see very regularly. So help us understand what has driven the momentum in the favor of the bulls over the course of the week.
I think obviously it started with the ceasefire. It also started with Ukraine and Russia agreeing to do talks in Turkey. Started with Trump giving a 90-day pause to China. It also had Trump doing a deal with Great Britain on the tariffs front. So I think all of these were strong positives from a FII perspective, because lessening global tensions, lesser tensions around India means that I think FIIs probably continue to come in and buy. At the same time, Mr. Trump's whatever, claiming credit for the trade deals, for the ceasefire, then saying that I had offered trade. So there's a lot of noise around that, which the news flow has caused probably a certain amount of saying is India's trade deal, which everybody expected India to be among the first to sign a trade deal, because we'd been discussing and negotiating right from day one, including from Mr. Modi Trump visit, where we laid down the goal of more than doubling our trade balance to $500 billion. So we thought that India would happen quickly. It's not. So maybe is Mr. Trump trying to negotiate more, extract more from India? A little bit of uncertainty around that. But I think one of the other factors which has driven the market, because FIs have by and large been positive for the last 10, 15 days. But I think it's the DIIs who have started buying. And that is clearly seen in the broader market doing better than the large cap market. Your mid caps and small caps have done better. So clearly, domestic fund managers obviously have a great more firepower from customers in terms of the small cap and mid cap segment, because I think of the 26,000 crore SIP book, at least half is in the mid and small cap segment, is what I understand. So naturally, when they step in, you can see that clearly the mid and small caps tend to outperform that. And if you see last month's flows about 26,000 crores, as of last April, they had increased their cash balance by 17,000, which means of the 25,000 they got during the month, only 7 or 8,000 they deployed. So their overall cash balances went up from 5% to almost 6.87%. So that in the month of May has started getting deployed, and clearly they are picking. So the important point here is also is that, look, the Indian markets are not yet fairly priced, reasonably, because they're still at a premium to the overall emerging market at around 75% compared to our long-term rate of 62, and mid and small caps continue to be higher valued than large caps and higher than their long-term averages. So mid and small cap flows, the domestic fund managers who are hesitant were waiting so far in the previous months for the earnings season to come through. Now that the uncertainty earnings season, yes, the earnings season has been mixed. The guidance also has been mixed. But what happens is that all of this guidance was given in an air of tariff uncertainty, right? And the world. But we have seen now that those clouds are going away. So what's happened is that the fund managers are now thinking that each company will outperform what its guidance has given, because they've been unduly pessimistic at the earnings calls. I think this is a clear call that the domestic fund managers seem to have taken, and hence valuations are no longer that much of a concern. So now it's trying to pick that growth which will justify the valuations, as opposed to looking for value picks. So I think that fundamental thought process change in the fund managers is clearly reflecting here. I think growth, a promise of growth, will drive the markets in the future, and valuations concerns in pockets will be there, but
Absolutely,
overall,
yes.
I think that they will not, make a decision based on valuations, but more on the growth prospects.
Okay, so Sunil sir, point taken. Thanks so much for that roundup of everything that's been happening in the market. Rajesh, we'll come to you now. Give us a sense of what next week's prediction is looking like on the charts. Where are we expected to open on Monday morning? Given the kind of volatility that we've seen over the course of the week, what are you penciling in for Nifty and Nifty Bank? But more importantly, what are you penciling in for the broader markets? Because like Sunil sir mentioned, and also something that we've seen, every time the benchmarks fail to do the heavy lifting, you have the broader end of the market that starts supporting. Today, when Nifty and in fact on Thursday, when Nifty and Nifty Bank were doing well, you had the broader markets that were subdued. Either way, it all works out for the market overall. So give us a sense of what you are seeing across charts, and how can we expect Monday and next week's trading session to look like?
So for this week, sentiment has turned, extremely bullish for the market, as a lot of positive, as already Sunil sir has already discussed about all the positive which has happened during the week. And looking at all these positive triggers, market has also shown very strong buying action. And the way Nifty has moved up almost around more than 4%, and Bank Nifty moved up around 3% in a single week, that clearly shows that confidence is coming back on the street, and the way broader market has shown buying interest. The beaten down sectors have started recovering, like sector like railways, sector like defense, sector like chemical basket. All these sectors which were laggard now has shown good traction in terms of buying, and market breadth has improved significantly in this week. So we believe that the way Nifty is now trading about 25,000 level, we believe that some consolidation for next couple of days in range of 24,900 to 25,200, and possibly we believe that this breakout will happen on the higher side above 25,200, and once this breakout happens, I think rally can extend further towards 25,600, 700 zone also in the continuation of this up move. On the Bank Nifty is also holding above 55,000 level. So I think if it continues to trade above 55,000, possible rally, we may see another 500, 600 point rally from here onward, and possible target 55,800, even 56,000 we may see for Bank Nifty. So both indices are looking very attractive. Nifty mid cap, Nifty small cap is also shown very strong traction. So I think a broader market will also continue further from here onward, and I think this really may extend further in the coming weeks. So I think one should remain on the long side of trade. Lot of stock specific, lot of sector specific action is taking place at this juncture, and very sharp up move is coming in, especially in mid cap and small cap space. So I think this segment is likely to be very interesting in the coming week.
Okay, well, all eyes are going to be on the broader end of the market as well over the course of next week. But on that note, gentlemen, hold your thoughts. We'll just slip into a very short break and be right back on the other side, where we'll discuss more about how the week has shaped up and what to look forward to next week. Welcome back to Your Trades. Let's keep the discussion going with Sunil Subramaniam as well as Rajesh Palvia. Sunil sir, I want to come to you about your opinion on gold, because after the run-up that we've seen when tariffs came, when our escalation with Pakistan got a little out of hand, when the Russia-Ukraine moment, that war started, when Israel-Gaza war started, every time there has been a knock of uncertainty, gold has always inched higher. I believe the markets got used to this kind of up move that gold had been giving, given that we had back-to-back geopolitical instances happening. But now if you take a look at gold, it's seen a cut of 3% over the last 5 days, 5 trading days itself. Do you believe that the run-up that gold has seen has now come to an end? Has gold peaked out? Or do you believe that this is just a slight bit of a correction, and the strength that the equity market, the investors have, or the confidence that they have in gold is going to sustain going ahead as well?
So first of all, I don't believe that the rise in gold has so much to do with the global uncertainties. Okay, it's the historic thing about gold is, yes, it does that. But I think what we can clearly see in this whole period is that the Chinese and the Japanese and the Indian central banks are the ones who've been stocking up on gold and buying this gold as a counter to the dollar. They're just building up the counterbalancing. This is a de-dollarization move which happened. Now, obviously, the sentiment with that de-dollarization move led the price of gold to go up, because gold ETF flows internationally also saw a positive. The correction has been because those ETF flows have eased, because, as you said, the uncertainties seem to have reduced. But let's bear in mind that all Mr. Trump has done is a 90-day pause with China. We'll still have to wait and see how that goes. Then the other 90-day pause, which is put on the market, where he's going to deal with. And when he actually strikes these deals with bilateral agreements with all countries, he may win some, lose some. So American dollar, right? I think dollar is still about 8% below its highs, right? So the outlook for the dollar, if it's a weakening dollar, then I think gold will still benefit. So I think and that weakening dollar will happen if Fed steps into a rate cut cycle. Now, as far as we are concerned, right now, the jury is out on the rate cuts. There are 2 or 3 possible rate cuts factored in internationally. But if you look at the fact that if the tariff works out well, then the US economy is not going to see that much of inflation, right? It's going to be steady, and maybe growth will also not slow down. So the chances of a rate cut then, automatically become a little bit iffy. So I think that it's the dollars, the interest rates and the dollars move, which will decide the fate of gold. So what is my suggestion? There are 2 suggestions here. One is that, see, gold, thanks to its performance over the last decade and all that, has to be a part of your asset allocation. It's not an all or nothing story. So I think 10 to 15% of allocation to gold in one's portfolios is good, because one never knows when something's going to go wrong. Trump, China may have good, but 90-day pause, they may say, we don't agree. Right? So it's got to be a safety haven for you there. Second is, how do you play it? Is there a lot of mutual funds? Because see, gold is versus equity, right? And the key is that there are multi-asset funds which have 15 to 20% in gold. So I think rather than go and take a separate gold ETF, investors should look at increasing their multi-asset funds because then they win either way. If gold continues a rally, they will win. If it doesn't, the 80%, 70% that's there in the equities will help them. So I think it's best to take a very balanced approach. It's hard. I don't know whether Rajesh will have a view, from a technical perspective. But for me, fundamentally, right, the de-dollarization move by China, I think is here to stay. I don't think just because a deal is struck or something, they're not going to do that. They will continue to slowly accumulate gold, is my view.
On that note, Rajesh, let's just bring your opinion also in. What's the technical setup around gold looking like, and what's your outlook on that front?
So I think after this correction, gold is almost trading near to its crucial and important support area of $3180. So I think 3180 needs to keep as a closely watch. If it slips further below to 3180, I think some more profit taking it may attract, and then maybe on the lower side 3100, even 3050 kind of level we can see in the near term perspective. So 3180 is very important and crucial on a weekly closing basis. If it continues to defend this 3180 level, some pullback action towards 3280, 3300 kind of level, we may see again in the gold. But still, if we look at the longer term chart, still strength is there in the gold. But yes, it's a very strange kind of rally we have seen in very short period of time. So I think some cool off effect is taking place. Some consolidation is likely to be there at certain level only. So maybe some price consolidation is likely to be there in gold for near term.
That's the take on gold. Rajesh, also want to discuss two buzzing sectors over the course of the week. One has been defense, there's no doubt about that. The other one I want to talk about is the entire railway pack. You pull up names like Titagarh, you have IFCI, look at RITES, look at RailTel, RVNL. All of these stocks have seen gains anywhere between 26 and north of 30%. Do you believe that this run up on the charts has been too much in a week and a little bit of a consolidation is what lies ahead for these names? Or do you believe that this is just a reversal happening and there is more momentum? How are these counters placed on the charts right now?
So most of the railway stocks have witnessed a correction of almost 8 to 9 months, and after this correction, a price and time correction both has happened for the railway stocks, and most of the stocks have corrected and reached to their attractive price point. This is the first sign of reversal on visible on the weekly as well as on the monthly chart. And looking at the near-term, short-term structure, I think we may see furthermore continuation of rally in most of these railway stocks. If we look at the structure of Titagarh, I think here also there is a breakout. So Titagarh, IRFC, Ircon, I think all these stocks are looking attractive, and we believe that another 5 to 10% kind of rally we can see in the coming days for the railway stock. So I think those who have already bought stock can hold the position and keep trailing stop loss, on the higher side as you get the further higher prices in the stocks.
And Rajesh, before we move on, would you like to share some stock specific recommendations on what's looking good on the charts for next week?
The two stock idea, one is from the automobile space, that is TVS Motor. A flag formation breakout is already there on the daily chart, and the way stock has moved up and given the breakout of flag formation, I think TVS Motor can extend its gain, and possible really towards 2930 we may see in the coming week. So one can buy this stock with stop loss of 2790. And the second stock is from the metal space, that is Jindal Steel and Power. Stock managed to give breakout of contracting triangle on the weekly chart. The chart pattern indicates that this stock can extend its gain. Very strong buying action throughout the week. A long built up is there. So we are projecting target towards 1030 to 1040 for Jindal Steel and Power. Keep your stop loss around 960 to buy this stock.
Thanks for that. Sunil sir, I'm afraid we have a little bit of a paucity of time. So if I could just get a one sentence answer from you on this question. Defense, enough run-up seen, would it still be an add to the portfolio?
Not at these levels. I think valuations are already expressing there's a 50,000 crore order book. I think valuations already express it. So I'll say buy on dips, don't rush in at now. Okay. But rate sensitives are my pick because as you mentioned, the inflation, the rate cut, I think RBI will declare a dividend of 2.5 to 3.5 lakh crores to the government this week. So I think rate sensitives are my top pick.
So thanks so much for that quick take coming in. And on that note, Sunil sir and Rajesh, we'll have to let you go. Thanks so much for joining us. Viewers, it's a wrap on this week's edition of Your Trades. Thanks so much for tuning in.